Japanese officials look to have intervened in FX markets as yen weakness got extreme. Meanwhile, crypto vols fall off a cliff as spot grinds back down to key supports. Skew flips back into put premium as 62k gets broken and 3,000 on ETH. And lastly, Bitcoin Gamma looks to have got a bit longer down near 60,000, which might provide some near-term support. All this and more in this week's Crypto Options Unplugged. Hey everyone, welcome back to Crypto Options Unplugged, sponsored by Deribit, the leading crypto options exchange in the world. I'm your host, Imran Larka from Options Insight. I've got my man, Dave Brickell from FRNT. How's it going, man?
Yeah, I'm good. How are you?
I'm all right. I'm not loving the price action in crypto right now. Tell me, what do you think's happening here?
Yeah, it's a bit frustrating. I still think we're kind of in a range, really. I think, was it last, God, the weeks go quick, but last week we kind of tested up a little bit towards that.
66-ish.
Yeah, 66 years. Couldn't quite get above 67k or hold above there. And then now we're drifting down back to the other end of the range. It's like the usual, when we're 67, everyone's talking about 70, 75, probably me. Yeah. And now everyone's talking about 55s, 52s, air pockets and all that sort of stuff.
But we were just respecting this range for ages, right?
Yeah. And I think, we've spoken about it a bit, certainly I think into the halving and around that, we expected we'd just be chopping a range. Whilst we didn't expect much to really change, like post-halving, I kind of actually felt one of the big things was like this sort of tax repayment and all that stuff in the US. And once we got past that date on the 15th, we might actually see sort of things sort of kick off again and pick up a bit. But we've not really seen that. We've stayed in this range. We kind of, I guess, lacking a little bit of new narrative. Market just feels a little bit tired and... Yeah, we're looking for a catalyst. We had the Hong Kong ETFs launched today. Volumes from that look pretty crap. I think the volumes around like $12 million. Is
that it?
It's like, so it's nothing. Yeah. So it's kind of there's been lots of disappointments. Weird. Yeah. I'm also super conscious, very short term, that we're month end. So there tends to be a lot of noise, and everyone tries to over interpret and over analyze like what's going on in broad markets when it's month end. And sometimes you have to go there's position adjustments. There's all sort of things that go on. Typically as well, month end is like negative liquidity because people start to sort of window dress their sort of books and stuff. You've actually seen, if you look at, I always talk about the important role the RRP, the reverse repo facilities played in terms of injecting liquidity into market. If you look over the last few days, that's built back up. But again, that's just people, taking some risk chips off the table, if you like, park it back at the Fed overnight. So month end, when you do the snapshot of the balance sheet, it all looks pretty safe and nice. So then that probably comes back into the market like in May, and liquidity picks up a little bit. So right now, I think there's headwinds. We have to talk about the dollar. The dollar wrecking ball continues going sort of gangbusters, and it's
yen moves wild.
Yeah, absolutely wild. And generally, I think so quite broadly, dollar is super strong at the moment because you've got this policy divergence in terms of you've got this US economic resilience, and we keep having to price out when the Fed rate cuts come. Meanwhile, the rest of the world is slowing down. You've got Japan kind of, still very much in a disinflationary world, if not outright deflation.
Well, let me ask you a question about this, because I don't really understand. What makes them choose to not hike rates and just fire at the FX market and use dollar reserves to try and get dollar yen back down? What's that decision-making process like? Why would they rather just, it feels like waste money trying to get dollar yen down because it just keeps rallying back in their face versus just hiking rates? Is it just the debt has gone so far that they're going to kill their economy?
I think again it's like all these things. These are why I'm always like kind of perma bullish on Bitcoin, if you like. Like it's kind of like impossible trinity of like what do you control? Like we either control rates and kind of have yield curve control and all that stuff. and then we if we've got freely floating capital markets, then we have to control the currency somehow, or if you're gonna let the currency flow and sort of that yields more freely float, then you have to have capital controls, which you see in China. So you kind of like essentially, Japan probably needs to let rates go a lot higher, and it's kind of what the FX market's telling you. But they can't do that because they're running a GDP deficit of something like 250%. So they can't allow yields to go materially higher and blow up the bond market. So they're kind of needing to keep rates lower
blow up
for
the bond market. They own their domestic bond market though, right?
They own their domestic bond market, but they also own a chunk of the US Treasury market. But they kind of, I mean, the other thing with Japan, which is why I've been kind of more on the dovish side, and everyone's like, oh, Japan's going to be the big blow up story for the year, is like, yes, they've for the first time in decades experienced higher inflation as kind of everyone has, but the economy was basically flirting with recession, as recently as sort of December, and that fourth quarter. You had Tokyo CPI came out last week as well, which was like pretty soft, sub 2%, which is probably a bit of a lead on the sort of broader inflation in Japan. So I kind of think the inflationary experience being short-lived. The economy still, is struggling as well. So they're kind of weighing up all those things. They probably really want to keep, reflating things, because when you've spent decades trying to get some inflation to return, you don't want to kill it off too early either. So they've got all those things to manage. Bank of Japan came out and said that the targeting of the FX rate wouldn't be a part of policy, and rate policy wouldn't be set around that. And I guess as well they probably realise that it's to kind of appease the speculators, if you like, by setting your policy to defend your currency, is probably a risky game as well. But I just think they're in again a really, really sort of tough spot in terms of ultimately what they need. They need the Fed to get rates lower. China need that. I think the rest of the world, certainly across Asia, need that.
But do you see? Is this kind of like a signal now that dollar yen reached a level where they're just not comfortable with it going higher? So they're kind of being more aggressive at containing that now, and that probably means their message to the Fed becomes more aggressive now as well.
Yeah.
So do you take that? How do you take that as a signal to Bitcoin and crypto? Like the fact that the yen's done what it's done this week. Yeah.
Well, so I think what's interesting. Firstly, I think they've completely like balls this up in terms of, when we're at like $150 yen, they started jawboning it, and we'll kind of, we'll intervene, and they did nothing. Then we got to 155. I think people actually into the Bank of Japan last week were talking about they might hike rates because of that. In the end, the actual Bank of Japan itself was pretty dovish, and they kind of just glossed over the FX stuff, said that's kind of not our problem, which then put in everyone's heads, well, they're not going to do it, so the Ministry of Finance will do it, and they'll do the intervention, which it looks like they did. But again, they kind of let it happen, and then we hit like 160. Was it Monday morning? And then got hit that down. It looks like they've come in and they've intervened. But I think the thing for them is it's more about the speed of the move rather than the absolute level itself. And the problem with that is once the market kind of knows that you're just more worried about the volatility in it and the speed of the move rather than actual level, then every time they come in and whack it down, people just keep shorting the currency at every level that they kind of intervene. And you're seeing that now, right? So you have the big move down to like 155, probably washes a load of sort of short-term guys out. And then in dollar yen, people just sit there on the bid, and now we're back up to what 157.5.
Yeah, like I say, it just feels like they've fired their bullets and it's made no difference.
No, but you're fighting, you're fighting like economics, if you like. You've got a Fed that have got rates of 5.5%, who are still doing quantitative tightening. You've got the Bank of Japan at 0%, who are still effectively doing quantitative easing. So that is the dynamic that's going to keep pushing dollar yen higher. As much as they don't want it to happen, it's how it is. So what's going to happen, and this is really interesting for Bitcoin for me, is I think there's one of two ways this kind of ends. Either you're looking at a complete currency crisis and yen blows up. And by the way, China's now looking on, going, their biggest export partners, currencies getting weaker and weaker and weaker. They don't want the instability that brings. At the same time, they don't want to lose competitiveness with Japan. So it starts to raise the prospect that China are going to have to devalue their currency. And you kind of then obviously confidence goes, that magic thing of confidence. Once that goes, then you've got problems. So I kind of think we're either going to go that route where, again, we get back to 160. And then, like, you know, you're going on, and all of a sudden people talking about 200, and they're proven to be impotent.
Yeah.
And that kind of, that valve kind of gets removed, that these guys are in control of this. Or, and I think this will be really interesting, this will probably come out on Wednesday, I guess, maybe before the Fed, but or the Fed have to do them a favour and come out dovish, signal like a softer tone around rates and all that sort of stuff. And then, because ultimately I think the Fed's the only one that can actually turn this dynamic around. So therefore, when I've talked about before about Bitcoin capturing like the tail risk, the left and right, because it's funny because people have come on to me and gone, oh, you said it was like capturing these tail risks, then why are we getting hit right now? Why are we not rallying? Because we're not yet at the tail we're not at the tail yet.
We're not at the disaster scenario. Yeah.
So if the big blow up comes and China devalue and the yen's got like dollar yen's at 200 or whatever, I think then you'll see Bitcoin will kind of start to rip. The flip to that on the right tail is the Fed come out tomorrow and like annoy every bear out there by being like pretty dovish, really sanguine on inflation and the recent strength of that, and become like a December type pivot.
I mean, the last time Powell gave a statement, though, he was relatively hawkish, right?
Yeah.
Saying that the data is not letting us not letting us cut rates, essentially.
Yeah. Right. But these guys flip flop, right? And there's politics at play. So if he was to do that, and I don't know, like I've given up trying to read this guy. If he was to do that, then risk is going to rip and Bitcoin's going to rip, and then you're kind of at the right tail. Or if he carries on towing the hawkish line, then Asian currencies are in trouble. And then things will break. And then because potentially then the treasury market starts to break, then it does become the Fed's problem.
Right. But more sort of about immediate sort of crypto, the flows have dried up, right?
Yeah.
And we're seeing sort of marginal outflows now. And I saw this tweet from Jim Bianco talking about, if you look at the filings of who the buyers are of the ETF, you saw it as well, right?
Yeah.
So he's like going, it's just degens, short-term degens buying it. There's no institutional sticky money that's buying it, which basically means that if we start to break down below 60K, a load of the buyers of ETFs might turn sellers, and we find ourselves accelerating lower. What do you think about that point?
Yeah, I mean, we've known for a while that the big institutions, just by the sheer clip size, the big institutions aren't yet buying it. But I actually think that's more of a positive than a negative.
Because they will eventually.
They will eventually, and it just takes time, right? And we've only just started to see some of the
How long do these guys take, though?
They take forever, man. Like as well.
Boys, hurry up.
Yeah, like it might even, like, some of these things they think in quarterly terms and things like that, right? So all right, we'll start from the third quarter buying. And we're all sitting here because we like to see the price go up all the time. Like, why does it come now? But these things will take time, and people are still understanding it. We've kind of opened this gateway now for the institutional money to come in. Like it now probably opens up. Okay, let's look at it. Let's think about it. These things have to go through boards and all sorts of stuff to get approved to start trading it. So yeah, these things take time. I mean, I used to like to give an idea of how some of the institutions work, I used to, back in my FX days, like we'd pitch ideas to some like the big like asset managers, big real money funds on like a currency that, we really like, namely currency. And you put the case together, you go in, you speak to them. They'd have an old investor committee process that could last a couple of months.
That's true.
Like, to come on, like they can move, they'll miss 5-10% of the move, but they're going, right, we're going to put this like long-term trade on. We don't care about that 5-10%. So it's the same. So it does take time. We'll like the degens who have bought it sort of puke out. I still struggle with that mentally, in that those guys could be punting around on exchanges and stuff. So it's still
because I would have thought the point of doing it in an ETF is you can park it in a tax efficient place.
Yeah.
So like your long term if you're a bull for crypto and you think it 5-10x's from here, you don't want to pay tax on those gains.
No,
right?
no, exactly.
So you'd rather park it in a vehicle that allows you to have it sitting in a SIP or ISA or whatever, or Roth IRA for US people, right? And you earn that appreciation tax free. So that is stickier money, even though it might be retail size. It is stickier money. But I guess the argument is, but then there's hedge funds in there as well, which maybe will be throwing it around a bit and are going to use that trading instrument as an actual trading instrument. So I guess that's his argument, right?
Yeah, and that could be flightier. Who knows? But like it's again, like once you're in this kind of range bound, in some ways it's no surprise that people aren't piling into it. And
yeah, exactly. You need the momentum to return.
Yeah.
For that next leg higher to be on, and now the way it's carving it out, that range, it's very clear, right? Break 72k, it's game on, pretty much.
Yeah.
Right. So people might just be, well, there's no point in me buying it here because we could break down to 50. So I'm just going to wait for the confirmation that we take out those highs and we go again, right?
Yeah.
It's an easier way to trade it, I guess.
Yeah, and to say it's we're lacking a new catalyst at the moment. I mean, sometimes price becomes narrative, right, and everyone kind of jumps on that. But you know, if you think of the bullish drivers at the start of the year, we had 7 cuts price for the Fed. We had obviously all the hype and that around the ETFs, which have lived up to the hype, by the way. I mean, I still don't think we should take away like what a hugely successful launch it has been on the
Was
ETF.
it $15 billion pretty much?
Yeah, like it's
around
huge.
That, inflows.
I still think the macro is kind of lining up really well. We just pushed out the cuts and stuff like that, but
it's interesting how much they've crushed the vol market. Like literally, they didn't hang about. It's like market's just been range bound for a week or two, and it's grinding down to these supports that have held a few times, and they have annihilated the vol. It's pretty incredible how much it's one of the biggest weekly drops in vol I've seen in a while.
Yeah,
right?
But then I always think, like, obviously we had like Manny on here a while back, and I always think the vol traders, like, everyone loves like selling vol.
They do.
And so any excuse, it's like bang, there you go. And particularly vol, you know, at the levels that we kind of trade in.
Yeah, and they're less scared. Like when the market doesn't look like it's going to just keep breaking higher and higher and higher, that's when they're empowered to sell vol in crypto, because they seem to be less scared of a really bad crash.
Yeah.
Right. So they're happy to sell vol in a kind of flat to down grind of a market. But it's when the market's really bullish that they kind of shy away a bit from selling.
Yeah, and it's I mean, it's kind of a little bit like picking up the pennies in front of the steamroller at times, right? But it kind of really works until it doesn't. But yeah, like I think given it often pays to short vol, and until you get that kind of explosive move. And there's a lot of people I speak to around that who certainly like last year and stuff who sort of absolutely cleaned up on that trade. And
what, shorty vol?
Yeah. And when you speak to them, they're like, you know, what's materially changed to think there's going to be a vol explosion of some sort? Like, and when you step back, and we all get like kind of carried away with these short term narratives. When you kind of step back, you go, yeah, I guess so. You know, what's going to really make things kind of rip? So yeah, and I think that's where we are now. Like I'm sat here going, okay, I can think of, you know, things that will actually kind of help us break out. Like, so we get through month end. I think there'll be sort of some liquidity comes back to the market. People start to look to put on some risk again. So that might start to take us back up to the top of the range. I know, who knows, we start to see more inflows come in. But outside of that, unless we get like let's say something either breaks, you know, a currency breaks, or there's something that materially sort of shifts in the macro, I know maybe we get a dovish pivot again because they're worried about the stuff that's going on in Asia. You know, maybe some of the geopolitics. Like, so there are risks out there that could sort of trigger a move. But without that, right now, it's not clear what kind of takes us out of the range. But at the same time, I don't see what really kind of flushes us to the downside. And it'd be interesting now, and I'm saying this, we're at around, as we came into the studio, we're around like 61k. So always risky when you.
By the time we walk out, we'll be below 60K.
Yeah. But like I think we've had those couple of flushes around the geopolitics, right? And it got bought into very quickly. So like if I was to be trying to range trade this market, I'd probably be wanting to pick some up here. And then you probably, when you get to 65, 66K or whatever, if you're trying to play that trade, want to be sort of kicking stuff out. But I don't see, I keep hearing this talk about the 52K and stuff like that. I don't feel there's that amount of leverage in the system to really flush us out that severely. And I think position is probably pretty clean now, and it's kind of almost an apathetic kind of just drift off.
Yeah, I mean the funding rates we were talking about that exploded to like 25-30% annualized have come the way back, right? They've come into like 5% in the long end or something. This is actually something, instead of doing a vol update today, I managed to catch up with Jeff Anderson, who's over there at STS Digital. They're a very active prop shop that kind of market makes options, not just on the big caps like I trade or like you can trade on Deribit, but also they do OTC altcoin options as well. So it's a really interesting conversation that I managed to have with him. And we talked about the funding spread and stuff. So check out what he had to say. Okay, so today I've got Jeff Anderson from STS Digital with me here to kind of give me his outlook on what's going on in crypto right now. Jeff, how's it going?
Hey, what's going on? What's going on? It is an honor and a privilege to be here.
No, great to have you on, man. We're trying to get as many guests as we can on this Deribit podcast going forward, and your name definitely came up as one we had to get on. So, just for the viewers' benefit, why don't you give us a quick outline of your career background to date?
Sure.
How you got into crypto and crypto options more specifically?
Yeah, absolutely. So I traded 15 years of options, FX and commodity options at a couple of investment banks, most financial centers around the world. Got pretty burned out doing that, I'll be honest. Just got sick of the politics and you know what it's like being an investment bank. And started plunking around on Deribit. This was like mid 2019 maybe. And I had a good buddy of mine who made the move over to the dark side couple years prior, and he was in my ear quite a bit, like, oh yeah, you got to read about Bitcoin, check this stuff out. And finally got orange pilled, became a Bitcoin maxi, fell down the rabbit hole, and realized there were some really interesting things going on in crypto. And yeah, just kind of ended up making the move end of 2019. Had a couple friends who were deep in the space and kind of joined up with them. And actually, first stop was at a kind of high frequency ARB shop. And we had a really great run for a couple of years there. Post FTX, I wanted to switch it up and get back more into like risk taking side of things, and joined with a couple previous colleagues, guys I knew from the market, who started STS Digital. And we are, an options focused shop. And that is my, that's my true love. That's what I was raised on. So,
as it is mine.
There we go. Yeah, absolutely. And so, yeah, just, really excited to try to, help push the option side of things in crypto, as you are very well aware. I mean, it's just sorely underrepresented in the market. There's this debate about, why do I need to trade options when I have perps at 20, 50x leverage? It's the same thing with isolated margin. Well, it's not, and options are a very useful tool. And as this industry grows, I think it's going to only get bigger. And so that's what we're trying to do at STS. We started as a prop shop, and we realized pretty quickly that there was almost zero liquidity in altcoin options. And so we, quickly created some solutions around that, and kind of created our own OTC desk to help other people and to market make some of this stuff, because that's what we were doing initially. We run principal risk, and it's kind of expanded into a lot of other things. Anything that has convexity in crypto is kind of what we touch. So
what type of alts can you provide? And is it only institutional clients? Because OTC, like how does a retail punter like me trade options on random altcoins?
Well, you're a big dog, right? So you're in there, right? Come on. You don't have to worry about that. You do have to be, there's a certain threshold. So, the most obvious one would be like accredited investors in the US. So you have to be like a high net worth individual. But we work with a lot of foundations, a lot of wealth management desks. We work with a lot of token projects as well, because there are a lot of option solutions to be had if you're a token issuer, right? There's a lot of treasuries sitting out there that aren't doing much, and there's a lot of structured solutions that we can turn those into productive assets. And it's kind of, from a background in FX, which you come from, there's a lot of this stuff that goes on, right, in terms of treasury management, and you're well aware of how this works.
Well, I'm not FX, I'm equities, but I'm aware of what you mean, like the type of structures. So then you touched on anything with convexity. So you do you offer structured product solutions as well, like exotic type payoffs and stuff like that?
Yeah, absolutely. We actually issue structured products, depending on kind of where you are. But we can issue structured products with an ISIN, and you can subscribe into it. Like, it's very, very regulated. We are attacking crypto assuming that, the reg stack is going to be a very strong one going forward. And there's a real attention paid to kind of the KYC side of things. So we do really official structured products that private wealth guys who don't really know or trust crypto are comfortable to subscribe into, right? So they're very bankruptcy remote, and we're all very, very careful. And so, yeah, we do that stuff. We do exotics for sure. The European barriers are a little bit easier than American knockouts in some of these altcoins.
But I mean, like, surely it helps you having a 24-hour market with daily options on Deribit, though, right? To hedge your risk.
It does. But we do trade. I should say, yeah, we do trade barriers on altcoins as well. There's not as much liquidity, not as many daily options out there. Yeah, it gets messy, but it's good, man. Maybe I'm getting ahead of myself a little bit here, but I just think, this option space is going to 10x, 50x in the next couple of years. Like, this is where, we had to lay the groundwork with the linear stuff, and then some other, piping that we had to get kind of lined up in terms of like tri-party stuff and counterparty. Everybody has to get comfortable with each other as a counterparty. But I think the next 2-3 years, we really see this stuff kind of explode.
Yeah, I mean, I think it's also going to be a function of if spot moves around a lot, right? Like, when spot goes quiet and vol goes to 30 or 40, maybe people aren't as interested. But like the type of moves we had this year have certainly got people looking again. And I guess that leads on to my next question. Like, what do you think about generally the crypto market? Some people are saying, I think Raoul Powell was on Twitter saying that, the alt season is upon us, or it's coming soon. So, I mean, for yours, that's huge if that is true, right?
Yeah, I'm not sure I completely agree with his bullish narrative, at least in the short term. Now, he's a great thinker, and I love the way he speaks. And I've read GMI for the last 15, 17 years, right? Like, I think he is fantastic. He is a very optimistic and positive person. So I'll leave it at that. But I mean, I think right now what the market's struggling with is we've just run out of steam a little bit, right? Vols, the last 4 or 5 sessions have come off. I think 1 month's off like 15 vols, right? And so the market feels tired. The market doesn't love all of this token inflation that's happening. We're having a couple TGs, a couple of launches this week. We've had a lot in the past, a lot of really big numbers get put out there in terms of, fully diluted valuations. And I think we're just kind of sitting under that right now. We've had some bad news from Bitcoin recently. ETH has struggled for, 6 months. So we're in a holding period a little bit, I think, in the short term. Summaries.
What do we need? What does the crypto market need to get going?
I mean, honestly, we kind of need a little dip here to, 55, 56, and to get people comfortable and to have conviction again that they can buy. A little bit of good news, the data in the US has been so strong that I think that's continues to hurt sentiment the strength of the dollar, right? Look at what's happening overnight with dollar yen, right? I mean, the dollar's on fire globally, even against FX, against other stuff. So I think we need a little bit more of a washout lower. We need some tokens that are scheduled to launch to step back and say, hey, actually, maybe we're not going to launch right now in this market. And I don't know, just some of this, blind bullishness to calm down a little bit.
The ETF launch, like something we've talked about on this podcast before, is how we think a lot of the kind of halving anticipation was being front run, and so you had people front loading their inflows into the ETFs ahead of the halving. Now, now the halving's happened. We're seeing outflows. We're certainly not seeing really net any inflows. But also, you had Jim Bianco out there talking about how actually some of these IAs, these advisors, have not actually got anyone into Bitcoin. It's all hedge funds and retail still, from the size of clips, from the filings. All these guys should have filed by now, and you should have seen reasonable allocations of Bitcoin ETF on their books, and there is nothing. Yeah. So he's arguing that actually it's fast money that bought the ETFs. It's not slow moving institutional allocations. Fast money that moved it, which means it's fast money that can come out. And actually, if we start breaking below 58K, which is like average entries for a lot of these purchases, then do we get a bit of an air pocket where everyone like stops out?
I think there's some risk to that for sure. I don't think the market is short enough vol and short enough stuff yet for that to happen. I think people are still maybe choking out some long options, and that's why I'm seeing this move. So I do think that there is a gap from 58 down to 51, 52 type of thing that we have to be worried about. But I think there's going to be a lot of people who buy down there. I definitely agree with you that there's been a lot of fast money that's been in there, and the real story here, which is the structural flows, BlackRock is allocating 1%. That was always a medium to longer term story, right? And I think a lot of it was people were surprised by the actual flows into the ETF. And now we're realizing that a lot of these flows were potentially basis traders who come in and buy the ETF, post it at as margin, which, by the way, you potentially may not be able to do anymore, and sell the future and earn the 20% roll down or whatever it is. And so there were a lot of people doing that. And now that the basis has come in.
That's a no-brainer, that basis trade.
Yeah.
About that trade. Such a...
Oh,
right.
How could you not have that on? I mean, like it's an unbelievable thing, especially for a shop like ours that you think about. We get dollars and, people post dollars to us. So we have this balance sheet, and you buy Bitcoin and you do the cash and carry on a dated future. And from the start, your balance sheet is making 15% a year. Like it's unbelievable that more people didn't do it. And it's just, again, for the 30th time, it just shows how much leverage and euphoria is in the system at any point. Because people you say, why don't you do this cash carry at 19%? They say, well, I want to go out and I want to trade Pepe or Bonk or whatever, all these other meme coins because I can make 20% a day, let alone 20% a year.
Yeah. But people think that's going to last forever, right? Whereas this is like risk-free money unless your counterparties default, basically, right? So if you do it on an exchange, you have exchange risk. If you do it through people like you have counterparty risk. But like outside of that, that's your only risk. And you just, compared to rates of 5% in the US, like you said, your annualized rates got to like 30%, not even 15, right? I mean, they probably average somewhere around 15, 20, and they've come back down a lot now, right?
Yeah. No, I mean, in the front end, for sure, like 1 month stuff, 30% annualized. But I mean, you could lock in long end stuff at 21, 22%, I think it was. Yeah, and the curves come down, obviously quite heavily now. I think the front's at 6 and the backs, we're like 6 to 8 type of range. And
if you did that cash and carry at 21, and then in a month it corrects back to 6, do you just unwind it? You don't bother sitting on the position till the end of the year anymore. You just unwind money, right?
That is I'm glad you pointed out. It's a little known thing that all these people say, like, oh, I don't want to be in this because I have to wait a year to make 20%. It's like, well, actually, this is a hedge against, let's say you want to go out and buy all these other meme coins. Well, this is a hedge against that, because if that stuff goes poorly, then you're realizing that's 20% immediately, right? Because the premium condenses from, plus, whatever is 12,000 down to flat, and you make your money then, right? And people don't realize that stuff, right? And it's a beautiful thing to be able to sit in a structurally, carry trade that you can then trade around, right? And you can do that on Deribit because you put your dollars on there, and then it's like a crypto dollar, if you will, because you have a constant dollar amount there, and you can use that to trade options around it, right?
Yeah, you can sell cash covered puts essentially, right? When spot dips and vol pops, you smash out some puts, and you can take delivery on those essentially, even though it's cash settled. It's like you're getting delivered because your future.
Yeah.
If you match it with the futures short, then your futures expire and your options expire together, and you essentially become long your Bitcoin, right? And you can sell covered calls against your Bitcoin. You could do what was called the wheel strategy, right?
Yeah, absolutely. Just wheel strategy and wear diamonds. It's easy, right? Do nothing, right?
No,
beat up.
We're not saying it's easy, and we're not saying it's financial advice either. We're giving no.
Yeah, no. NFA.
We're saying what we like to do in this little playground.
I've heard others have done this. All
right, in closing, I don't want to keep you too long. What do you think is the opportunity then? If you're not convinced of alt season necessarily, what do you think is the biggest opportunity out there in crypto options right now?
Well, I should say, so I am very bullish on the space, obviously. When I moved from banking into crypto many years ago now, I've been shocked with the quality of people around me in crypto, right? I thought this would be a bunch of scammers and schemers and all this stuff. And, there is that here. But day in, day out, I'm astonished at, the intelligence and the people around me. And it's a small market. You can't just be anonymous anymore. People really stand up for, who they are and what they're doing and stuff. So I am still very, very bullish. As we said earlier, medium, long term, I think the ETF flows are going to be huge. I think ETH will eventually get approved. Options will come at some stage on these ETFs, right? That's being delayed at the moment, which is, I think, hurting the market. And so, yeah, I think these alts, you just have to be very selective about what you're going to buy and what meta you're going to chase in this market. But there's a lot of really interesting products out there being built, a lot of really, incredible builders that we talk to and work with. And yeah, it's about, you have to be more selective, I think, at the moment in terms of what you're going to buy and where you're going to invest and place your money and look at. But, what I'm excited about is the, structured products, the options, where this space is going. People are getting smarter about kind of markets here and how to trade these things. And it's no longer just 100x long this stuff. People are getting intelligent, and there's more and more people who are becoming educated due to people like yourselves who are, preaching the gospel of options and how it can be an incredibly useful risk management tool, right? It's not just for degens.
Something we talked about when I first met you was the crypto dispersion trade. Is that one of the best opportunities out there, do you think, where you're long alt vol and you're short large caps like Ethereum, Bitcoin vol against it?
I think that's a very, very attractive one. Absolutely. Structurally, I think that makes a lot of sense in this market because, trading options on an altcoin is almost like it's a compound option itself, because a lot of these alts, they move around and as we both know, this world is not normally distributed. And so option models are going to do maybe not the best job of pricing some of this wing risk. And so if you are long optionality on altcoins, these altcoins themselves can behave like an option. They can go up 300, 500% in a week, whatever it is. And so owning some of that tail risk, which is people who have a foot in traditional finance, like you say, it's a dispersion trade where you're long the single name stock vol and you're short the index because you have this idiosyncratic risk. Like, that makes a lot of sense. And that's
I think we've just come up with a new structured product for you to design for retail punters.
boom. Okay, I'm gonna make a note of that right now. And all revs go to Imran. Here we go.
Done. And then Options Insight subs can get a discount for the structured product.
There we go. We're in. Yeah.
Okay.
Yeah. So
that was a joke, by the way.
Again, this is not financial advice. We don't think you should trade this product.
No, but I do like the idea. I do like the idea of owning altcoin vol and selling like big caps against it, because that's the thing. The institutional money does create a bit of a dampener on those large caps anyway, and the alts can just like triple in a month if they feel like it, right? If you own some of that, then you get a massive kicker on those trades.
Absolutely. And I mean, the vols have come back in, quite a bit, right? Like, there were a number of alts we were pricing, anywhere from 150 to 200 vol, and they're realizing 250 or 300, whatever it is. So, so that spread at it, a lot of times was at 70, 80, 100 vols, and you're like, that's a lot to pay. And it is a lot. And we've seen that stuff condense quite a bit. So as we kind of drag lower this market, these type of scenarios then get attractive again, right? The carry to hold that position in vol terms is a lot smaller. And so it makes it more manageable. But I mean, I'd be curious what you think when these ETF options come out, what that does to the Bitcoin term structure and volatility and stuff, because that could make this an even more attractive type of trade, as this structural institutional option flow is most likely a vol suppressant in my mind, at least.
Yeah, I would agree. And I would expect puts Skew to become more persistent in Bitcoin as well, right? As the hedging comes in as well. Yeah.
Yeah, that's a good point.
It's been a pleasure to speak to you. And make sure if you're ever in London, you come and join us actually in the studio.
Absolutely. Will do. All right. Thanks, boss. All right. See ya.
Okay, so yeah, that was a good conversation with Jeff, right? I mean, the man's very experienced at vol and moving over from FX to crypto, and I quite like the way he's looking at all these altcoin vols, right? A lot of opportunity there, I think.
Yeah, and it makes sense, right, to being long the altcoin vol and short on these sort of majors.
Yeah, I called it the dispersion trade in crypto. It's not quite a dispersion trade, but it's like when you own loads, when the spread between all these crazy altcoins, vols, and regular large caps, when that compresses and you buy the alts and you sell the other one, if nothing really happens, the altcoins are still much more volatile than the regular, so you're not going to lose a lot of money. But when markets go crazy, some of these alts are going to triple in value, and that vol's just going to smash it, basically. So it's quite a nice trade.
Yeah, it's a really nice trade.
Yeah.
And I think, like Jeff made the point, I guess partly what we were saying as well around this market at the moment, there's kind of no real sort of narrative. So it's kind of understandable that vols have drifted off a lot.
But it's like these are the times we want to set your book up for the explosion that comes later, basically.
Yeah.
He said he's still very much a long-term bull.
Yeah.
But he's relatively cautious in the near term. And to be fair, the options market right now is signaling some near-term caution, right? Put Skew's going a bit nuts. I think we've got Bitcoin front-end put Skew back to 10 vols, ETH 15 vols, because you've got all those call sellers still pretty empowered to sell more, do more overwriting and stuff. So I definitely think there's some near-term risk in the short term to the market. And in the absence of any narrative or any catalyst, we could see a little visit down to the low 50s, right?
Yeah, which is scare a lot of people. It's interesting as well, because you timed it pretty well a few weeks ago when put Skew was looking a little bit stretched in terms of wanting to fade that and taking off some of those hedges, but you actually kind of
now I'm not so clear it's a fade right here right now, to be honest. I mean, anything can change. Like if we get a catalyst out of FOMC that's very, very dovish or whatever, we might rip higher. But I would say, because the absolute levels of vol have come down so much, right, then I don't think I want to be fading it just yet, right? So as spot has drifted down to support levels and vol's got crushed, it's kind of like the expectation is that, yes, the support's going to hold again. But the problem is, if the support doesn't hold and there's an air pocket down to the low 50s, then vol's going to go up again. You know how, like last week I was saying Ethereum spot vol correlation was interesting, where from 3,200 to 3,700, it was like vol was going lower on the way up. And then, but then on the way down, when we broke 3,200, vol picked up on the way down, right? And which has not been the case for most of this year when we were just ripping to the upside. So I think we're maybe that trigger level is a bit lower now, but sort of below 3,000 on ETH. Vol probably goes back up, given that it's come off so much in the last week. It's come down by over 10 vol points in the 1 month, right? It's pretty dramatic. Yeah,
it's hard, and because I know, say, all you vol guys love selling vol, so it's hard probably to want to go against that to pick some up.
I mean, I like selling my fair share of crypto vol as well, but then when they smash it down into the kind of 50s, 60s, then I start to think, okay, now it's kind of mid-range. It's not a clear sell. When it's in the 80s, it's very easy to sell it and want to kind of overwrite your positions in both directions and sell some of that wingy stuff that just decays really, really fast. But now I'm thinking, if you've been short vol, or if you have refrained from buying optionality, and now the market's coming down here and testing these key supports, and there's clearly risk that it could break down because there doesn't seem to be any inflows to support it right now, I would say maybe scoop up a little bit of, even if it's just at the money gamma, to kind of protect you for a bit of a breakdown.
Yeah. All right. Well, that's not the bullish.
Sorry, I know we like to be bullish usually every week, but I think when the time, you gotta kind of see what's in front of you, and right now I think it is a time to maybe stick a few little hedges back on the book, not be overexposed to a potential breakdown of 60K. And then, you want to be in a position, and I've said this before, the reason to hedge is so that when the market has a proper flush out, if it does, you are in a position to add risk and you're not taking off risk at the worst possible time. And so that's all I would say. That's certainly what I'm doing. I added a few little short-term puts recently when we broke down 62K. So yeah, that would be my key takeaway for this week. Cheers.